Hi, assalamu alaikum, and good afternoon. Thank you to the Arab Federation of Exchanges for inviting the Dubai Financial Market to moderate the AFE Annual Conference Saudi 2021 panel session on the ESGs data issue, challenges of ratings and rankings. I'm Shira Osman, Head of Sustainability at DFM, and it's my pleasure to begin this session by welcoming our international panel of experts. From global ESG data and ratings providers, I'm delighted to welcome Patricia Torres, Head of Sustainable Finance at Bloomberg in the UK, Joan Castro, Head of European ESG at MSCI in France, and from the region, I'm delighted to welcome Marwa Al-Mastaki, Director of Marketing Business Development at Bahrain Bourse, William Tome, Senior Regional Head at CFA Institute, and Hussam Laresh, Head of ESG Invest based in the Middle East. Welcome. As ESG dominates the investor theme of the 21st century, today's discussion will look at the value of environmental, social, and governance, the ESG data, the challenges, and also the opportunities it creates for investors, exchanges, and companies reporting on ESG. Regionally, in just 2 years, we have witnessed significant initiatives to advance ESG and sustainability reporting. In MENA, for example, 8 stock exchanges now provide ESG reporting guidance, including DFM, and have hosted multiple ESG workshops in the region to support companies. The growth in voluntary ESG reporting has now reached 223 companies in the Middle East, according to the GRI database in Jan 2021. And also at the beginning of this year, the UAE regulator, the Securities Commodities Authority, ESGAR, mandated all companies listed on the UAE exchanges to disclose sustainability reporting for the financial year 2020 and to adhere to the GRI standards, which was great news and a significant milestone for the region. Since 2018, we've also seen an increase in sustainable issuances. For example, to date, 9 ESG listings with a total of $7.75 billion, including the first COVID in the region, the COVID bond, were issued on Dubai's capital market, Nasdaq Dubai. Furthermore, we've also witnessed regional industry-led stakeholder collaborations to mainstream ESG, including the Dubai Sustainable Finance Working Group led by DFM and the Dubai International Financial Centre, which recently published the group's Sustainable Issuance Guide and Sustainable Investing Guides, which will help support companies and investors. So lots of great initiatives that have already come out of the region. And as ESG investing continues to move into the mainstream, the need for greater standardization and contingency of ESG data grows, which leads me to my first question to our panelists. What are the key challenges for data providers today who gather ESG information, and how do you tackle data accuracy concerns? I'd like to first ask Patricia. Thank you.
Sure. Thank you so much, and good afternoon. It's a pleasure to be here and to participate in such an impressive forum. And I'd like to start by congratulating the region for your progress in the last 2 years. So now going back to your question, so with regards to the challenges that we face as data providers, I think the first challenge is lack of disclosure. I've been attending the session with the previous panels, and the disclosure comes in every single one of those sessions. The average disclosure score for the 12,000 most important companies in the world that we cover is around 29% out of 100, which is extremely low. It's better than before, but it's still quite low. The second challenge is inconsistent reporting standards. So if you ask any analyst in the market how easy it is to understand the company's carbon transition risks and carbon reduction targets, which is so important for the net zero target that we all have now, she will tell you that it's an enormous challenge because the companies have and disclose data in completely different forms. I think the third challenge is the fact that the data is not machine readable and is spread across several documents. At Bloomberg, we know that on average, environmental data is spread across 3.7 documents and is text format, which makes it really difficult for us to use technology to actually parse ESG data. And lastly, the fact that there is a lag between the annual and the ESG report or the CSR reports. We know that on average, companies take 3 to 6 months after the annual report is published. And as you mentioned, in the region, your advice is up to 6 months max. But this is not the case globally. And unfortunately, we're still seeing companies that take up to a year. This is the case of a US oil company, for example. So how do we, Bloomberg, how we tackle these challenges. So let me give you just 4 examples. One is data quality. So we take data quality very seriously at Bloomberg. So for example, we only display data on the terminal that represents 80% of the operations or 80% of the workforce. So if a company says that their carbon represents only the headquarters, we don't take that information and we don't display that information to investors. The number 2 is disclosure. So how do we tackle disclosure and comparability? So what we've done is that we have started and we launched our scores, our estimates data for carbon data. So last month, we're now able to estimate the scope 1 and scope 2 data for up to 50,000 companies. And as a reference, if we look at just the disclosed data that we have in the market, out of our 12,000 company universe is only 3,000. So now, as you know, TCFD requires carbon, UNPRI requires carbon, SFDR requires carbon. So more and more investors are looking for the greenhouse gas emissions. And now with Bloomberg model, they can actually run that estimation up to 50,000 companies. The number 3 is comparability. So how do people compare carbon targets as an example? So we have developed some proprietary data called the climate transition scores, where we allow investors to compare carbon targets. So company A versus company B, even though the companies are disclosing carbon targets on an intensity or absolute levels. And number 4 is that Bloomberg, we participate in more than 10 industry working groups. So back in 2015, Mike Bloomberg launched SASB. Mike also shares the TCFD, and we also participate in expert advisory groups such as the European Union's platform on sustainable finance and the Hong Kong Securities and Futures Commission's climate change technical expert group. So this is how we tackle, Cheryl. So thanks so much for your question. You are on mute, Cheryl. You are on mute.
Yes, thank you. Thank you for the comprehensive answer. I'd like to address the same question to Joan.
Yeah. And thanks a lot, Charles, and good afternoon, everyone. And first of all, thank you to the AFE for this invitation. It's a pleasure to be participating in this very interesting panel. So to your question, Charles, definitely, a few of the comments made by Patricia also, relate to, the challenges that we are seeing, when it comes to, ESG data. And well, first of all, I think it is important to understand that, compared to traditional financial data, ESG data is still in its early days. And this, of course, brings several challenges that I would summarize into 2 opposed, but at the same time, concurrent trends. So, on one hand, you face the challenge of, having too much data available. And, you have seen it, right? A lot of companies that disclose, in their sustainability reports that, reach to 100, 200, 300 pages. So in those cases, the main challenge for us is to really be able to navigate through, the information that, companies provide to identify those, issues and, that information that it really refers to the most material, the most significant, financially relevant information, right? As this is the focus of our ESG ratings model. So that's, one challenge, right? Sometimes there is a lot of information available in the market. The second one, which is related, but actually the opposite, is the lack of information, which is something that already Patricia also mentioned. So just to give you an example, when it comes to carbon emissions, which definitely as more and more investors are looking into climate change risk, this indicator is becoming very important. If we look at companies within the MSCI ACWI IMI, which is close to 9,000 companies globally, only 20% of companies are actually disclosing this type of indicator. So of course, the gap is quite important. So that's definitely bringing a new challenge for us when it comes to assessing companies, when it comes to the way the companies are managing climate change risk. So on that note, for us, given these 2 challenges, we actually are using alternative sources of data. So looking into data coming from regulators, coming from the media, coming from NGOs to actually fill the gaps and have a more holistic view on how companies are managing ESG risks and opportunities. And also to overcome this challenge, which we have also developed, different estimation methodologies. So when it comes to carbon emissions, we estimate that, carbon emissions for, scope 1, scope 2, and also scope 3, right? In this, particular indicator. So to come back to, to the use of alternative sources of data, actually, if you look at our ESG ratings, we have around 45–50% of the signal that is coming from, this type of sources, right? So we don't only rely on, what companies are telling us, but also we use of, this type of information, right? Regulators, media, NGOs, this type of alternative sources of data, again, to have a more holistic view on how companies are managing, these risks and opportunities.
Excellent. Thank you very much, Juan. And Hussam, very quickly, on the regional perspective, is there any difference on the challenges?
Sure. So basically, in here, the regional challenges, out of the 500 listed companies that are listed in the GCC region, we've noted from our research that 54 companies issued sustainability report in fiscal year 2019. But this number grew substantially from 20 sustainability reporters in 2016. So in here, the main increase in sustainability reporting from 20 reporters in 16 to 54 in 2019 is due to the investor push and stock exchange efforts to promote ESG disclosure among listed companies. What we do at ESG Invest to promote ESG disclosure among listed companies is to engage with them in partnership with the 6th Regional Stock Exchange, in which we support listed companies understand that ESG disclosure is important and that investors care about this information. And overall, we support their sustainability journey, but supporting them understand better what ESG means and what's the main characteristics that that they need to include. What we receive as in terms of feedback from companies in the region, it's that they do have this data internally. They just have to disclose it externally. And this is what stock exchanges are actually doing at the regional level to promote ESG disclosure among listed companies. And we are happy to support that effort.
Excellent. Thank you, Sam. Oh, which leads me on to the next question, actually, in terms of what are the opportunities this is create in terms of how investors, data providers, exchanges should cooperate and support companies to improve their ESG data disclosures. I'd like to bring in William from the CFA Institute in terms of providing some global examples.
Hi, everyone, and thank you for the opportunity. So to answer the question, we definitely need to have a standard setting organization. We definitely need all these bodies to come together and define a standard. So companies are currently inundated with different requests from different stakeholders. What is really needed at this point is for everyone to come together and hammer out a standard or a little amount, a few standards that are accepted widely. So there are lots of standard setting bodies working on this problem. The leading effort has to be mentioned is probably the IFRS, so the International Financial Reporting Standard. They have an initiative to set up a sustainable standard board that sits alongside the IASB, the International Accounting Standing Board. So the IFRS effort includes all the major sustainability standard setters, including SASB, IRC, who, by the way, are merging now to become the Value Reporting Council, and including also GRI, TCFD, etc. Thank you.
Excellent. Thank you, William. And regionally, Marwa, what have the exchange's efforts been around ESG data disclosures to support companies?
Good afternoon, everyone. Thank you, Shiraz, for this. Obviously, as an exchange, there's a significant role that exchanges can play in spreading awareness on the ESG agenda and the sustainability agenda, because the exchange's role is more focused on issuing guidance publications, raising awareness, building capacity, conducting webinars, and creating ESG-focused indices that could help raise awareness on the importance of ESG for exchanges and for their subsequent investors. This will help drive and enhance and transparent ESG data, helps build, strengthen the trust in the market, and bring in more liquidity into the market. By now, majority of GCC exchanges are voluntary signatories to the Sustainable Stock Exchanges Initiative, and majority have already issued their own ESG guidance documentations. But the question that leads, which William has already highlighted, we need a single standard that all GCC exchanges or all listed companies in GCC exchanges can follow in order for there to be comparability across all the listed companies. That will help bring comparability and consistency in the market. Other than stock exchanges, I'd also say that sovereign wealth funds are also a key player because of the significant holdings in listed or unlisted companies. Because of the representation that they could hold, they could help shape and mandating ESG disclosure on their portfolio of companies.
Thank you, Marwa. Thank you. And Hussam, you manage the ESG investment assessments and ratings of companies listed in the Middle East. How should investors and data providers exchanges cooperate with companies, do you think?
So basically in here, what we do to support companies enhance their ESG disclosure is by providing them first with our ESG reports. Our analyst evaluates the ESG performance of listed companies in the Middle East using publicly available information and translate into that information into quantitative and qualitative data in form of an ESG report that is sent to companies at no cost, and it allows them to better understand their ESG performance and better understand how investors look at their ESG importance. And we think that was a main driver to push companies improve their ESG disclosure overall. We've seen companies using our ESG report as the guidance to inform their sustainability reporting. And we've seen stock exchanges also using our ESG reports to engage with their listed companies to highlight where disclosure lack, where they can improve their performance. We are also open to accept conf calls from listed companies to answer any question related to methodology or question on how they can improve performance overall. So in here, again, we support regional stock exchanges in their engagement session with the listed companies. And all these factors are contributing in driving ESG forward in the region.
Thank you, Sam. And Patricia, is this the same from your perspective?
100%. I think that I completely agree with all my colleagues in the panel today. I think if we all ask for the same thing, if we're all consistent with our requirements, we will achieve so much more. So today, companies face several ESG questionnaires depending on the ESG data provider or the ESG index provider, and only large companies can actually have the money to employ teams to respond to all these questionnaires. So this is what it's called market cap bias, where companies with better teams, they're actually able to get higher scores. So we can facilitate everybody's life if we all ask for the same things, which is a global reporting standard, as William mentioned today, that is industry specific with a comply or explain approach, integrated reporting, which is ESG data being reported alongside annual data, financial data, and also data that is machine readable. So we all know that it's really hard to take data out of 300-page like report and data that is written in text. So let's all make an effort to actually provide the data in a table format that machines can read. Only then, I believe that the market will be able to price assets correctly, mitigate risk, and drive capital domestically and international to foster innovation and to drive a much more sustainable planet.
Fantastic, thank you, Patricia. Joanne, would you like to add anything further from a global perspective?
Thanks, Charles. And I think, definitely agree with the comments made so far. Definitely, but it would make our life easier if we were to have, the information disclosed by company was, standard. Definitely, that would, enhance, and make our life easier. What we're seeing, in general, from a global perspective, is that companies are more and more aware of, disclosing this type of information. We are actually, aiming to reach out to all the companies that are part of our universe, so they can, verify and, give us their feedback on the information that we are using for our assessment, right? And if we look at, the response rate, of this outreach, we noticed that actually, 5 years ago, we had around 20% of companies responding to this outreach, whereas today that number has increased to close to 60%. 60% of companies worldwide. I look at the numbers for the Middle East, and actually, the trend is also positive. So, we are coming up from 2% in 5 years ago to around 20% in terms of the response rate of companies, which is definitely positive. And I think one of the key drivers of this is the fact that international investors are using more and more ESG and our ratings to engage with companies. ESG is part of the dialogue that they have with companies on a regular basis, and they're making investment decisions in the back of sustainability considerations. This, of course, brings a very strong incentive for companies to start disclosing more of this information, and as ESG is driving some of these capital allocation decisions. Maybe my last point is that we have been also engaging with different exchanges around the globe, because we think that it's quite important to educate corporates on those the data that they have to disclose, right? It's definitely one of our key priorities as well.
Thank you very much. So very interesting viewpoints. Obviously, sustainability reporting is very much on the increase, and a common standard would be very beneficial to all. I'd like to also discuss now from an ESG investment perspective, how do ESG data issues such as transparency of rating methodologies, the comparability of various rankings and data availability impact asset managers? I'd like to first ask William from the CFA Institute this question.
So comparability is not really an issue. Asset managers recognize that different data providers offer different models with different weights on different factors. Now, asset managers generally select the provider or the model that is best for their strategies and products. Transparency is a bit more of a problem or an issue here. If an asset manager doesn't know the weights of various factors, or more generally the structure and working of the model, they cannot evaluate if the model is appropriate for their needs. The issue of ratings, comparability, and transparency is more of a problem for end investors who typically are not steeped in these nuances. So there's a belief that ESG ratings should be as consistent as credit ratings. In my opinion, that will never be true, or not anytime soon. Creditworthiness is a much more tight and a more defined concept. Sustainability is much less so. So people value different things, and I expect that there will be more rating models coming to the market to choose from. What end investors need to figure out is what exactly is important for them. Thank you.
Thank you, William. Marwa, regionally, do you see any impact?
Thank you, Shiroz. So recapping on what William was mentioned, I agree with that. But adding to that point, I think when it comes to the region, ESG data and transparency, there's significant coverage on multiple terminals on emerging markets and large and mid-cap companies, but not sufficient coverage is being done on frontier markets, particularly in the GCC. And not all listed companies are covered on ESG rankings or ESG ratings. And that's where transparency and more data is required, I think, on that aspect.
Thank you, Marwa. Joanne, would you like to add anything on this?
Yes, Charles, and maybe let me make a few comments on both comparability and transparency. So on comparability, yes, and I think William already alluded to this. Definitely, ESG ratings are not the same as credit ratings. Different studies have shown that the correlation of different ESG signals is low, right, compared to credit rating agencies. And one of the reasons behind this is that the methodologies are pretty much not the same, right? In the case of MSCI, as I have already mentioned, we are really focusing on evaluating how companies are managing those risks and opportunities that are more financially relevant based on the sector that they operate. Whereas for some other ESG ratings providers, the rating is aiming to capture the level of disclosure, for instance, of companies' sustainability information, right? So in general, for investors and for any other different stakeholders, it's really important to understand, the difference between the ratings and what they're trying to capture. And that brings me to, the point on transparency. So, which is actually a very important commitment for us, ensuring that, providing transparency to the market when it comes to our ratings and, to ESG information. So to give you a few examples, for instance, we have recently, published, the ratings. Any company can go to our website and they can access, the ratings of, companies. So, this is, publicly available information. And also, not only that, we have also made available our materiality map. So, basically the assessment, the key issues that we choose for each industry. You can also consult this information in our public website. And not only that, I think already, it was alluded the fact that, transparency for the end investor when it comes to ESG is also important. So we have also made available, the ratings and some more ESG key information for more than 30,000 funds, mutual funds, also, accessible through our website. So yeah, definitely, transparency is a key commitment for us, and also for our clients. And I think we are seeing that more and more clients are also trying to come up with their own in-house signal as they get more sophisticated in assessing these these issues. And for us, making sure that we provide the underlying data required for to build these signals is also important. We recently announced to our clients that we are going to publish even more information of this underlying information, which is the backbone of our ESG ratings. In order to support this, increased requirement of, accessing underlying data. So yeah, definitely transparency is quite important, and definitely, a commitment from us at MSCI.
Fantastic, thank you, Sean. And Patricia, would you like to add anything further?
Sure. I just would like to add that there was an article quite recently from the IR magazines saying that 40% of the largest asset managers use at least 4 external ESG research and rating providers. It's 4. And the reason which I believe it's because of the low correlation that we have between all the different ESG data providers, as Juan just mentioned. So if we look at Tesla, for example, we have MSCI rates Tesla with a single A, and the lowest is a triple C, and Sustain rates it as a 31.3 out of 100, considering the company as high risk. So the question that an investor asks is, who is right? Is it MSCI right, or is it Sustainalytics right? And the answer is, both are right, because they both have different methodologies and they're assessing the company from different angles. So what we have seen at Bloomberg is that, as Juan mentioned, that the clients are taking matters into their own hands, and they are creating internal ESG scores. So they are coming to us and asking Bloomberg, do you have ESG raw data? Can you help me to create my own ESG score? And can you help me integrate my own ESG score within my investment analysis? So we've seen a greater demand for ESG raw data. We've seen a greater demand for ESG scores, analytical tools. And we have seen a much greater demand also for our research management solutions, because they want to track and write the research notes and track it to each investment decision, and also track the progress of their engagement efforts in one single platform. So I think transparency is key, people using raw data, creating their own single scores, and they want to use the third-party providers as a benchmark, but not as a starting point. So that's where we're seeing the biggest, largest funds doing now these days.
Fantastic, thank you, Patricia. Hussam, are there any differences regionally in terms of the impact?
So basically, in terms of, there are healthy nuances on methodologies among different ESG rating agencies, but all provide relevant insight to investors. So we've seen globally, 10 years ago, investors moved from just using the ESG scores provided by the ESG rating agencies to become more sophisticated now to actually understand the differences among the rating agencies. So investors now understand that there are some rating agencies that heavily focused on governance, while others heavily focused on social or human rights issues. And they accept those differences, and these differences actually provide good insights for the investors to develop a different perspective across different strengths across the rating agencies. And again, as Patricia mentioned, investors develop their own ESG systems now, leveraging several rating agencies, strengths, and also highlighting key impacts across their funds, which means investors regionally at this stage still look at the ESG from a score perspective, but we will see that happening in the coming future as investors get more sophisticated in the ESG space by integrating more ESG factors as integrated in their investment decision and risk framework and investment philosophies. So investors look at their investment philosophy and select the best rating agencies that fit their models. As ESG become a more sophisticated topic in the region, we will definitely see more investors leveraging several rating agencies to come up with their investment framework, responsible investment framework and methodologies.
Thank you. Thank you very much for that insightful discussion. Before I move on to our next final question, I'd like to just ask the audience, if you'd like to pose any questions, please post and we will try and attend to them. One of my final questions is really going forward with regards to the future of ratings institutions. Should rating methodologies be standardized? And if so, how do you see this manifesting? Patricia, what are your views on this?
I think this is extremely important. And as I shared before, I believe we need to make it easy for all participants. We need to join forces and we need to have one voice so that everyone understands the ask. And let's not forget that we've been in this journey before when we tried to get IFRS adopted globally. In Japan, as an example, where use of IFRS standards has been voluntary since 2010, a report by the Japanese Financial Services Agency identified 3 key benefits by using a global standard: business efficiency, enhanced comparability, and better communications with the international investors. And today we have 144 jurisdictions actually using IFRS, which is amazing. We just need to copy paste, and we don't have as much time as we had before with IFRS for financial data. We need a common reporting standard, a global ESG framework that demands companies in the same industry to report the same data sets, data that is machine readable and reported at the same time as the annual report. And once this is achieved, I'm pretty sure you will see much bigger disclosure and consistency, and therefore a bigger correlation between ESG rating providers, lower compliance costs for everybody in the market, and of course, what we're all trying to solve, a much more sustainable and actable worlds.
Fantastic, Patricia. And Hussam, would you agree with that? Would the region benefit from ratings methodology standardization?
Yes, definitely. And the standardization debate is not new. So basically, I recall back in 2008 when I was just an ESG analyst, called back then CSR analyst, we had concern about the future of ESG rating agencies, since Bloomberg just highlighted their new ambition to issue ESG data on their platform. So it was a risk for the future for all rating agencies, so that investors can access direct data from the Bloomberg terminal. But still, rating agencies survived that through consolidation. So we've seen rating agencies acquiring other rating agencies, and this allowed to standardize also the methodologies across the board. So this level of consolidation is important. And at ESG Invest, we use international standard, but we also support it with national visions. Since we only focus on rating companies in the Middle East, we evaluate the ESG risk that can impact those companies in the GCC or in the Middle East. And we also highlight how this company positioned themselves to align with the national visions, such as the Saudi Vision 2030, the UAE Vision, the Bahrain Vision. And we believe these issues also provide insight to investors to make a better informed decision making. So standardization it will eventually come, but however, there is also a need to take into account the regional characteristics of each of the markets to better inform the risks to investors, and also to not penalize companies in emerging markets for global methodology that can apply, not necessarily apply at the regional level.
Thank you. interesting insight there. Marwa, from a regional exchange perspective, do you believe that rating and methodologies should be standardized?
Yes, absolutely. I agree with Patricia and Hassam. Many have criticized the lack of comparability in sustainability disclosures. There are multiple frameworks floating around, which doesn't enable a consistency and comparability across different disclosures. There needs to be a single set of standards to create comparable set of data across companies, set of standard minimum data reporting and collecting standards for auditable disclosures, and a common definition of KPIs could facilitate comparability in this region. And the IFRS statement has been welcomed by many. And I agree with also Patricia's point on the need to be focused on adopting a standard reporting technology as well. The technology aspect is important in this to enhance sustainability disclosures. As well as Hassan's point, which is very critical, the region has its own characteristics, and adopting one standard framework across the entire global landscape of companies might be harming the region. So yes, the regional factors need to be considered in this.
Thank you. So it's kind of having a global angle, but also regional inclination. William, what are your thoughts on this from the CFA?
So I would say yes and no. Yes, absolutely. I join my colleagues on the panel to say, yes, we need more standards, and we need something that's machine readable that will make our lives easier. But I would also add that if we don't get it immediately, what we need is really having rating institutions provide more transparency, so then you can make it yourself. You can yourself assess the data and make in-house your own decision. As an investor and as an asset owner, you make your own decision at house. So transparency regarding the methodologies of rating institutions is very much needed now. Thank you.
Thank you, William. I'd like to bring in Juan into this conversation as well, about from the MSCI.
Yeah, thanks, Charles. I think, as I mentioned at the beginning, definitely, disclosure, from companies will help us a lot, right? As a, rating agency, the fact of having, the same type of information from companies will help us a lot. We don't, as I also mentioned, we don't only rely on the information that is coming from companies, but also we use, some other alternative sources of data, because we think that this actually gives us, a more holistic view on, how companies are managing these issues, right? But definitely, having a standard would help in, collecting this information. Now, my personal view on, when it comes to so many different entities competing to be the standard, is that, sometimes it could be a bit challenging also for, for different stakeholders, including companies, to, navigate through what each of these standards is trying to achieve. However, I would say that, among all of these different, standard setters and frameworks, I would say that TCFD, for instance, when it comes to climate risk, and the fact that it's become the common language between companies and also investors. We have seen it in the UK and also New Zealand. Is becoming mandatory in terms of disclosure framework, and I think it is a good example on how it could there is most multi-stakeholder engagement, resulting in this type of frameworks that is commonly adopted by both companies on one side and also investors. And for certain, following the UK and New Zealand, perhaps some more countries will adopt this framework as we get closer also to COP26.
Fantastic. Thank you. And I'd like to go into our final question now, which is more around the region. Going forward for the region, will ESG disclosures increase to meet the needs of international investors and data providers? Marwa from Bahrain Bors, would you like to add to this?
Yes, I think in the region there should be a consistency. We've seen, as I said earlier, a number of exchanges have issued their own ESG guideline on different frameworks. Dubai's note has been very much welcome, using GRI as a standard. And so if the entire region as a whole comes in together to have one single standard, it will help drive the ESG agenda.
Fantastic. Thank you. And Patricia, do you have thoughts on this?
I totally agree with Marwa. I believe that we can only make progress if we start the disclosure journey. So we need to adopt one common global standard, at least to start in the region, that every company uses to disclose their information. And once the disclosure is out there, companies can feel much more comfortable with the data and how investors are using the data. And therefore, we can only achieve progress if first we start with disclosure, and then we start managing that disclosure and managing the performance of the companies and compare themselves against their global peers. So I completely agree. We need to start with disclosure and following one common set of standards in the region.
Thank you. And Hussam, obviously you've been involved very much with the companies on disclosures. What is your take on this?
So definitely seen the effect of the role of stock exchanges, sovereign wealth fund, asset managers in pushing disclosure in the region. So overall, we've seen also the shift from a CSR disclosure back in 2015 to now more on the ESG disclosure side, meaning reporting on material ESG factors that investors care about. So there's a shift in the mindset of what ESG means in the region, and we noted that across the years. And definitely we expect this trend to continue to evolve as more listed companies will disclose ESG information, and with more investors will ask for this information to inform their investment decisions.
Fantastic, thank you. And I will add one final question in, as we just have a few minutes left. How can companies respond to ESG information requests? Patricia, would you like to answer this question?
So like on my side, I think that they have to respond by understanding their industry and understanding which risks and opportunities are material to them, and be able to start collecting that data and disclosing the data to the market. And I just feel that we should drive for that consistency and comparability. And we can only do that if the companies can look at themselves and saying, what it's really impacting my industry? Am I disclosing this data to the investors, yes or no? If I'm not, let's make a push to say, this is important. And if you like it or not, it's going to come. So the question is, you as a company, do you want to be a leader or a lagger? And I feel that the region has the opportunity to lead in so many aspects in the green recovery. So again, as a summary, I just feel, think about you as a company, materiality that is specific to you, like your industry, and start disclosing the data because you can be the leader in that industry.
Fantastic.
And be the role model for the region as well.
Great. Hussam or Marwa, would you like to come in on this?
So what we recommend to companies overall is to focus on the material ESG factors from each of the rating agencies. So companies need to understand that although rating agencies apply different methodologies, however, usually the common key factors that are material are common across the ESG rating agencies. Meaning if the listed companies focus on disclosure on these key material ESG factors, which are usually highly weighted by the rating agencies, will necessarily see improvements in their ESG scores.
Fantastic. Marwa,
yeah, so on the ESG information request, generally speaking in the region, there has been an apprehension and understanding of the G part, but less understanding of the E and the S part. And that's where the company's roles and the exchange's role in educating them and understanding the importance of disclosing on these material factors. As Hussam said, it's important also to understand the materiality, the industry that you're operating in, and what's important to be disclosed on this information.
Fantastic. Thank you very much. We are coming to the end of our session now. And finally, I'd like to conclude by saying, as the ESG data collection and reporting has become increasingly vital for investors, exchanges and companies, industry-wide joint efforts and collaborations on developing universal standards for ESG data disclosures are very much welcomed. For example, the IFRS initiative that was mentioned by William earlier to accelerate convergence in global sustainability reporting standards will certainly help support ESG investing, the quality and consistency of reporting, as well as market transparency going forward. I'd like to thank our guest panelists, Marwa, Patricia, Joanne, Hussam, and William, for sharing your valuable insights and for the very interesting conversation. Thank you also to our session participants online and for your involvement. We hope the discussion was beneficial in driving forward the ESG data agenda within your organizations. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you.